Welcome to my channel. I'm Scott. In this video, I'm going to walk you through the process of valuing General Dynamics stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 82 billion market cap. They're trading at $300 a share and they have 273 million shares outstanding. General Dynamics is one of the largest defense contractors in the world. That's measured by arms sales and total sales to the US government. Their products include jets, nuclear-powered submarines, guided missile destroyers, tanks, and armored fighting vehicles. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow was nearly $4 billion in 2023, but it was cut in half to $2 billion in the trailing 12 months. They didn't have such a great first quarter, I guess. Net income is a profit or loss on the income statement. It's revenue minus expenses. That's pretty consistent each year, around 3.3 to 3.4 billion. Margins are 8%. That means they convert 8% of their revenue into net income. Revenue is sales for the company, and that grows a little bit from 38.5 billion to 43.1 billion. Revenue per share is 158. Stock price is 300. Their dividend is close to 2%. It cost them 1.6 billion. Free cash flow is not that much higher than 1.6 billion. So they definitely need to improve this number. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 95 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $85 billion. We divide that by 273 million shares. And we get a calculated stock price of $311. They're trading at 300, so they're trading at a 4% discount. It is a buy according to the model. There are 70 companies in the same industry as GD, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend $900 million in CapEx, a lot higher than the average. A good debt to equity ratio. For every dollar of equity, they have 40 cents of debt. They pay a good dividend, 1.9%. One of the higher ones on this list. Boeing does not pay a dividend, and GE pays 0.7%. The most is Lockheed, 2.7%. They generate $2 billion of free cash flow, which is more than Boeing, but a lot less than the top three. Also less than Northrop Grumman. They rank 5th in market cap. GE is number 1. This is GE Aerospace Division because they broke up GE into 3 different companies. Price to book is between the median and average. They trade at 24 times earnings, better than the top 2. They trade at 40 times free cash flow, between the median and average. A good price to sales of 1.9. The way to calculate price to sales is market cap over revenue or stock price over revenue per share. And they're not really growing that much, only 3%, which is lower than the median average. If you put $10,000 into this company 10 years ago, you'd be pretty happy. At $32,000 today, that's a 12% annual return. Around 2018, your $10,000 would have been $20,000. Then in 2020, your $10,000 would have came down to $13,000. Now the stock is trading at its highest level. Let's go through their first quarter highlights. Revenue $10.7 billion, up from $9.9 billion. So a pretty good growth, 8.5%. And their margins improved even more. $1 billion, up from $940 million, a 10% growth. So their operating margin is 9.7%, up 20 basis points. Net income $800 million, up 9.5%. EPS $2.88, up a little more than 9%. And they have a big backlog, $94 billion of sales coming in the pipeline, higher than last year of $90 billion. Their first segment is aerospace. Revenue went up a little bit from 1.9 to 2.1 billion. Operating profit also increased, 229 million to 255 million. Pretty good margins, 12.2%. And their backlog in this division went from 19 billion to 20.5 billion. And the value of the contracts went up from 20 billion to 21 billion. They received FAA certification for their G700. Their subsidiary, Gulfstream Aerospace, develops the G700. You can see a picture right here. Just 2 months ago, on March 29th, they mentioned in this article they got FAA, Federal Aviation Administration certification for this product. Their second division, Combat Systems, also went up from $1.75 billion to $2.1 billion. Aerospace was also $2.1 billion. But aerospace started at $1.9 billion. This started at $1.75 billion, so the growth is even greater. Operating income went up $37 million, but margins went down because expenses were higher. They had $3.3 billion worth of orders and a backlog of $15.6 billion. In this segment, revenue up 20%, operating earnings up 15%. $1.3 billion of sales of their armored vehicle to Austria. That's a $2 billion potential, meaning there could be more orders in the next few quarters. Here's a picture of the Panda. They sold $325 million of armored combat support vehicles to Canada, $285 million to Romania. They have a pretty wide reach. In marine systems, $3 billion to $3.3 billion. Operating income went up, but margins went down, same as last segment. $1.6 billion of orders, $44 billion backlog. It was higher in the third quarter of 2023. In their last segment, technologies, that actually went down a little bit, $3.2 billion. Operating income also went down, but margins were flat. The backlog is $13.5 billion, the contract value of $43 billion. They had $4 billion of orders, which was their biggest quarter ever. The reason their revenue is lower than $4 billion is because they took the orders. They haven't delivered all of them yet. Let's look at a stock on Simply Wall Street. Its last price, $300. 81 billion market cap, flat in the past week, up 43% in the past year. Let's see what they say about the company. GD operates as an aerospace and defense company all around the world. They have 4 segments: aerospace, marine systems, combat systems, and technologies. They were founded in 1899, headquartered in Reston, Virginia. Here's their stock price since they started trading in 1990. It was $463. Also in 1990, it got to its lowest level, $258. This is stock split adjusted. Of course, it was never trading at that low levels. It broke through 50 in 2002, then came down to below 30 in 2003, ran up to almost 90 in 2008. Then the Great Recession came down to 40, cut in half. And then from 2009 to 2018, it had a great run, up to about 230. Then it was down about 60% by 2020, a little over $100. And ever since then, it's only gone up. It went up 200% since 2020, trading at its highest level. Simply Wall Street's valuation is $428. They say it's 30% undervalued. 20 analysts priced this stock at $314. Their forecast for 2024 is $47 billion, 2025 $49 billion, 2026 $50 billion. Free cash flow forecast for 2024 is $4.1 billion, then $4.5 billion, then $4.7 billion. Their revenue from 2013 to 2018 was pretty flat, in the low $30 billion range. Then it grew from $30 billion to $40 billion by 2019. And then it was pretty flat since then, up a little bit from $40 billion to $43 billion. This red line is their debt. It was $4 billion in 2013, up to $18 billion in 2020. That was the peak of the debt. They have paid some off. Now it's a little over $9 billion. And this blue line is their equity. Their equity is higher than their debt by a good amount. It seems like the past few videos, most companies had higher debt than equity, and a bunch had negative equity. Their dividend back in 2014 was 2%, 3.3% in 2020. The forecast is 2.1% by 2026. Only insider selling in the past year, no buying. The insiders do not have faith in this company. 80% of the company is owned by institutions, 13% by the general public, and 6% by the employees. Their biggest shareholder is a Canadian asset manager, Longview. They own 10%. Vanguard, the employee stock plan, BlackRock, Wellington, State Street, and then you see Capital Research, T. Rowe Price, JP Morgan, Fidelity, RBC, Janus, Morgan Stanley. Their employee count went from 96,000 in 2013, currently 112,000. And the ticker trades on the New York Stock Exchange, Deutsche Börse, Xetra, Mexican Bolsa, London Stock Exchange, Wiener Börse, EuroTLX, Bulgaria, BATS Europe, and Sao Paulo Bolsa. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.